Good to see you. How are you?
Thank you very much, Jan. There'll be a lot to talk about, not just today, but for the whole of this year, I think, Jan, because it's happening gradually, but still slowly. But there will be some major events coming later during this year, I'm quite certain.
The inflation persists or remains higher than anticipated. It seems exactly what we were expecting happens. The inflation comes back. It remains stronger than the politicians and the Fed obviously thought. As we said, what came out of the bottle is not going to go back, right?
Well, first of all, when inflation was under 2, they said they wanted up to 2, and then he went up a lot higher than 2, up to 7-8% in most countries or more. And then they say they're going to put it back to again. They have got no tools to change inflation. This is political or events outside their political sphere that actually makes inflation move. The interest rates have a very only nominal effect on inflation. So they think now it's going down to 2% again. Of course it isn't. My strong view is that inflation will remain high on a global basis together with interest rates. And this now, of course, excluding food and energy is ridiculous also in these figures because that's everybody eats something and everybody uses fuel, and they're a major part of most people's spending. We have a temporary reduction in inflation, although last month, as you said, it was higher, but you're still talking about 4 annualized. If you take 0.4% for the month, I mean, that's still almost 5% for the year. So it's still much higher than they intended to be. Inflation is here to stay on a global basis. Commodity prices will continue to go up, food prices will go up, and oil and fuel in general will also continue up. So whatever reduction we've seen now is not going to last.
To increase the fear that the Fed might not lower the interest rates as expected, they are still playing the market. And I have here an interesting observation in an article by Zero Hedge, Egon. The ETFs that used to accumulate gold, they continue to lose gold while the gold price is rising. We are close to a record, a very strong development. And I think it shows there is a good chunk of distract into those vehicles. We see here the gold price increasing, obviously, and the holdings, the ETF holdings, decreasing, continue to decrease.
This is a very bullish sign. You have then funds and ETFs who have been selling gold since the middle of 2000, and in spite of a rising price, they're totally on the wrong side of gold. But of course, the main buyers of gold currently are the BRICS countries and the central banks, and they are obviously ignoring what investors are doing short term. There will be a point when all of these funds and the ETFs will turn around, and once they turn around, they will be with the trend for a change now, which they haven't been for the last 3-4 years, and that will obviously put more fire under the gold price. So what we're seeing, those two graphs are very bullish for gold. Gold is at a high and nobody's buying it, except for, as I said, BRICS and the central banks. That's an extremely bullish sign. Of course, the central banks, when they buy gold, they don't buy in the market. They buy off market always. They only influence the price on the margin. Still, as I said, there's not so much gold around. And what is now available for purchase for the central banks in the BRICS countries is putting upward pressure on gold. And that's just the beginning, Jan. It's just the very beginning.
We know that the crypto and especially Bitcoin had an incredible bull run. Obviously, many new ETFs were registered or allowed to start trading, and that drew a lot of money into Bitcoin. We see here ETF flows and the repetition of what we just saw, the outflows in gold. And nevertheless, the gold price is rising, although we saw this big distraction and the inflow into Bitcoin, another very strong sign for this gold bull market to me.
This is a totally different market, and now, of course, since Bitcoin is continuing to go up, now banks have to get into it, funds have to get into it, and ETFs are created for Bitcoin. I'm still of the same opinion. It's a wonderful speculative vehicle. It doesn't from the point of view of replacing gold. It'll never replace gold. It's just an entry on a computer. That's all Bitcoin is. It's got no intrinsic value. Gold has intrinsic value, and remember, half of gold production has gone into jewelry, and some goes into industrial. So we have the history of gold also, which is 5,000 years old against 14 years of Bitcoin. Fantastic for the people who invested in Bitcoin, made a lot of money. My target market is still, it could be 1 million or it could be 0, because what central banks decide to do. And therefore, it's not a good investment, and it's a high risk, and it's incredibly volatile, not suitable at all as money or as a replacement for gold. So good luck to the speculators, and I hope they make a lot of money, and I hope also that they get out in the right time. But anyway, it's nothing to do with wealth preservation, as we've always been saying.
Competition for fiat money, but the litmus test still has to come when there is a hack or a big blackout. We will see what happens then. The gold you have, the real gold, is something completely different. When gold rises in your currency despite positive real rates, the gold market is saying your government will have a debt spiral if real rates remain positive. And amazingly, Egon, we had a long time correlation, a clear correlation here between gold and real rates. If this catches up, the real rate has to come down big time, which on the other hand means they have to lower the interest rates, right?
Normally, gold goes up, and we can look at that since the 70s. I remember the 70s well. There was negative real rates. Negative real rates means that inflation is higher than interest rates. But now we have a situation when interest rates are actually higher than inflation, which is very unusual for gold to rise. But that means that gold is now signaling there are real problems in the world. Gold is not going up because of technical factors. They're going up because of geopolitical factors, and they're going up because of economic factors, and the fact that most countries are running deficits and increasing debt at an exponential level, debts that can never be repaid. And this is why now the world is worrying about what's going to happen to the world economy and to money. Money will have to continue to debase at an accelerated rate, which means that your money, as it always has done, will go to zero against gold. This last fall started, as we both know, in 71 when the gold window was closed, and now we're down 97 to 99% all currencies against gold. That is real money, and we have the last bit to go. Is what we're seeing now, and that's why gold is going up. It's not gold going up, of course. It's the value of money going down. And people who don't understand that, they will lose out or miss out on protecting themselves by buying gold at reasonable prices, because at some point it'll be very hard to get hold of gold at any price because there's a finite supply of gold.